The housing market has done quite a rebound lately. For a while, when the pandemic first began, we saw the market begin to slump, but since then we've seen a 180. And I want to talk about that dynamic today. I have 9 images to share. I'm going to talk through the Sacramento market. By the end of this, I hope you walk away with some talking points and some things to maybe share with contacts and clients. So this is Ryan with SacramentoAppraisalBlog.com. Let's jump in. So, what are prices doing? That's always the big question. Well, when we compare August 2019 with August 2020 in various locations, as you can see in this image, prices are up 8 to 10% depending on the metric we look at. And so we've seen astounding price growth. For a while, we saw the market more subdued in 2018 and early 2019. When we compared to the previous year, prices were only up about 4% or so. And so we've seen a market that has increased in momentum. It's going faster. It's as if the gas pedal was pushed on. And what's the gas pedal? Well, low inventory and mortgage rates below 3%. Okay, so here's a look at prices by the week. This is an interesting graphic. Let me explain what's going on. In 2020, here's the weekly median price in blue, and then 2019 is red, in 2018 is in green. And so in a normal year, you can see about at the midway point, we begin to see prices slough for the season, okay? But what's been happening in 2020 is we saw a dip in the market when the pandemic first began, and then a rebound, a strong rebound. And so it's as if buyers have been making up for what didn't happen in early spring, okay? And of course, taking advantage of low mortgage rates. It's been like rocket fuel for the market. And so right now, prices would normally be sloughing, but they've just been going up, okay? Now, what would be normal is to see prices begin to slough over the next few months. And so let's keep our eye out for that, whether we have a normal seasonal market or not. Multiple offers have been up this year. They're basically higher than they were last year. In August, they were 25% more than the previous year. In July, it was 17% more. And so it's very competitive out there. Here's a look at inventory. The most notable thing, you look at the months of supply compared to last year to this year. In Sacramento County, it's down over 50%. Same thing with the region, and same thing with Placer. And so when you basically cut inventory in half, no wonder why the market's so competitive. Now, here's a stat. When I usually pull my stats in early September, this year there were only 2,200 listings on the market. Last year at the same time, there were 4,700. And so we're talking about thousands of fewer properties that are hitting the market. Okay, there's a lot of reasons for that. I don't want to get into it right now because this video will be too long, but maybe we could talk about in the comments. Okay, but here's another look at 10 years of housing inventory in Sacramento County, and you can see that we've been hovering around 0.7 months, and it's really technically the lowest it's been in 20 years. It might be the lowest ever, but I don't have access to data beyond 20 years. This reminds us of the Blackstone days when investment funds were playing the market. And so for about a year, we hovered at about 1 month of inventory. And so the hope for our market is that we begin to see inventory rise. That's normal for the fall season, but it's just so anemic out there. I think a lot of sellers don't want to list during a pandemic, okay, and other reasons too. But let's look at volume. What's been going on with the number of sales? As you can see, when you scroll down, August was stronger than last year, okay? So we were up last year by almost 9% in the region, okay? And so it was a very strong August, it was a strong July, and it was a pretty strong June too. So these past 3 months have been strong, but when you look at the past 12 months of sales, this would be, September through August each year, each respective year, really the number of sales these past 12 months, it's been lower than, any of the recent years. And so it's been more lackluster. Compared to last year, it's down about 5 to 6%. But what we're seeing happen is that sort of the gas pedal go on and momentum change over the past few months. All right. So something to keep in mind. Here's a different way to look at sales volume. When you look at 2020 in dark blue, you can see that there was a dip during the pandemic. Okay. Buyers stopped buying homes, and since then, we've seen a rise, and it almost looks like from the weekly perspective that volume has normalized. Okay, in 2019, of course, is in light blue, but what we're starting to see happen, it looks like volume has sort of leveled off, and it looks like it's starting to slough for the fall season. And so sometimes people are like, "Hey, the market's so hot, we're not going to have a slower seasonal trend." But I would look and go, well, it almost looks like volume is starting to do its normal seasonal thing where buyers tend, there's simply less buyers playing the market. Okay. I know I'll get some hate mail. People will be like, this is ridiculous. You just said the market's slow. No, I didn't. I said that volume looks like it's doing its seasonal thing. That doesn't mean that the market's not uber competitive. Okay. Um, uh, Here's an interesting thing. There's this year so far, there's been 4.2% more homes sold with built-in pools. Not a surprise during the pandemic. Random fact in case you're playing Real Estate Jeopardy. Here's the last image. The unemployment rate in the United States is in black from 2009. It shot way up and it's since coming down. And in blue is Sacramento County. And so we're seeing this dynamic where surrounding counties in the United States, we're beginning to see the unemployment rate go down, which is what we want to see. But we're clearly watching unemployment. We're watching what's happening with forbearance. And we've seen an increase in mortgage delinquencies. And so despite all the glowing stats, there's these realities happening in the background where we're going to need some time to see how they play out exactly. All right, so some closing thoughts. I'd say watch for signs of a slowing seasonal market. Okay, this happens every year, okay? But don't be afraid to say the market is slowing if it is, okay? That doesn't mean that it's dull, but it means that, okay, the market is changing for the season. So let's watch that. And I'd say be cautious about judging the market based on a few sales. It's really important to not just say, well, here's what I saw happen in one or two sales, and there were 23 offers. Well, not every property is getting 23 offers. In fact, there's a lot of properties that are selling below the list price. Not everything is getting bid up. And so we've got to be careful to not, project what's happening on one property and say that it's a trend everywhere. Okay, last but not least, thanks for your support. I've been missing in action for a couple months. I had some health issues. I had an ulcerative colitis flare to be specific, and you guys just showed up for me in such a huge way. I really, really appreciate it. I couldn't have done this without you. And I just thank you so much for partnering with me. So this is me. If you like this, give it a thumbs up. I hope this was helpful. I'm kind of assessing whether I should be doing videos or not in coming time. And so, vote with your thumbs up, vote with your comments. Let me know if these are valuable, and then we'll go from there. Thanks, guys. Appreciate it.